All right, today is all about condos, and a lot has changed. In fact, this webinar today is 100% for real estate agents. I do believe, and I will send this to any of my new clients that are buying condos, but I believe if you own a condo, this is valuable information because the new guideline changes that took place on September 18th, 2023, so just a couple of weeks ago, will impact your ability to sell, possibly impact your ability to sell your condo, will definitely impact all new buyers in the market buying condos. And most of the time, whoever facilitates those transactions are real estate agents and the HOA. And so now real estate agents selling condos like you once knew it, completely different game. We've reset, we've restarted that entire process. And our focus today, in the next 15 to 20 minutes, I have my senior loan processor. The guy's one of the smartest guys in mortgage that I know, and I'm just blessed and lucky to have Dan Dietrich on my team. I think, Dan, I should probably know this off the top of my head, but I believe you've been with me since about 2016.
Yeah,
and I just love how thorough you are. You always have my client's best interest in heart, number one, as a processor. And number two, our realtors. You know, we're always doing whatever we can to help our realtors sell more homes, preserve their reputation in the marketplace, meaning a good experience when they recommend buyers to us. So what we're going to do today, if you are an owner of a real estate company, I want to encourage you to, as you listen to this, when you get to the end, reach out to me. I'd be happy to come into your office and present this. Every real estate agent in Washington State, I want to make sure gets this information, because I'd rather you get it now and me be the bearer of, I think this is good news, but I think it's bad news if you get caught at the wrong time. But I'd rather you learn this now than 2 weeks from your closing date, or right after you go and you say yes to a seller and you list their condo, then come to find out when there's an offer on it that it's not warrantable. It's not financeable through traditional financing, and you have to go with portfolio or cash. All right, so today we're gonna teach you everything you need to know about the new condo guideline changes. So I want to start off with this. Traditionally speaking, so real estate agents, if you own a condo, how you usually would go through the process, the lender was really nonchalant with the whole financing process. We just wanted to look at the budget to make sure that there was money, that the HOA was solvent. We also wanted to look at insurance to make sure that the HOA, the project, was insured. And then that was really about it. The other part of that, Dan, you can talk about this a little bit more, because I think the whole idea of limited review and full review, if you put down 10% or more on a condo, you kind of got this limited review where the lender would look the other way and not have to review so much of the condo docs, right? Historically speaking. Yeah.
Yeah. The old way was more findings driven. So if your automated underwriting system came back and said you had a limited review, you send out a limited questionnaire to an HOA. If it came back with a full review, then you asked for a few more things. Now, practically everything is a full review and then some.
And I think you kind of gave me this tip yesterday, but you and I got to interview the head of our condo department, which I'll talk about the importance of this relative to where we work, New American Funding, but talked about the idea of, you know, because I was talking to you and you said, Dan, just when you talk to real estate agents, when you talk to your borrowers, prep them on, just plan on a full review.
Yeah.
If we don't need it, if the findings say if they're putting down 10% or more, or 20% down, and the findings don't require it, hey, at least we have it and we only submit what we need. And I think that's wonderful advice. But so that was kind of the old. The new is, and what we're going to talk about today at the very beginning are the three big things that you as a real estate agent, as a buyer, as a condo homeowner need to know, that on September 18th, 2023, were kind of put in place on top of the findings, on top of your traditional guidelines for financing condos. So one last thing before we get into those. I want to also preface all of this, and the reason why I'm here today, I wouldn't be making this, well, I probably would be making this video, but it would be more of informative versus this is I'm lending a hand, I'm lending our company, I'm lending Dan Dietrich and myself as resources at New American Funding here in Washington State. We're one of the top condo lenders in the area. We do a lot of condominium financing. We're a direct Fannie Mae lender, direct Freddie Mac, direct VA, Ginnie Mae, VA and FHA lender, okay? So we finance a lot of condominiums. Because of the amount of volume that we finance, we have our own condominium department. And Dan, you and I got to talk with the head of our department over the last few days. And one, what a super valuable resource. And number two, it's pretty awesome to be able, while I'm in the trenches talking with a real estate agent that's getting ready to list a condo, or a buyer that's getting ready to buy a condo, to be able to take a couple of pieces of information, give it to Marlon, the head of our condo department, and within hours get a preliminary thumb up or thumb down. I mean, it's just a huge
Yeah, just like we would with any of our borrowers before we send them shopping with our agents. Do, if you will, a pre-approval process on your condo project. Know this ahead of time.
Yeah, I think it's so important. And so the message today is that you do, before real estate agents, before you list a condo, this is not, even if I have nothing to do with financing it, even if you're getting the listing, reach out to us. We're going to talk about what you would need to get me, and I can help you get that preliminary information so that you can give really good feedback back to your seller. And then also, as you entertain offers, you can collaborate with the agents. Because what I have found in 16 years in the mortgage industry, you have, and I'm just going to be super graphic, you have the haves and the have-nots in real estate. You have the real estate agents that sell a lot of homes that have perfected their craft, that study, that learn every single day. And then you have the real estate agents that just really don't care. They're here to make a sale. What if you get one of those types of real estate agents putting an offer on your condo and they're not advised, they're not informed, neither are their borrowers, and then you go 30 days to then arrive at some information that you could have found out up front. So number one, if you're a real estate agent listing a condo, you're going to want to reach out to us, ideally us up front. We can run this through for you and give you some feedback on that condominium project, okay? Number two, like Dan just said, if you're a buyer and you're interested in writing an offer, it's really easy. Dan, I'm interested in making an offer on 123 Main Street, unit C21. Can you do some information on this? Are we going to have problems financing this with 5% down? Okay, and we can do some work for you up front and help you better understand how that process would look and help you better write an offer with your real estate agent because of that info. So having that condo department in-house right here in our Seattle marketplace is super important. The reason why I have Dan Dietrich here is I don't have concrete statistics to confirm this, but I will tell you, and Dan, you can just jump in here too to confirm or say yay or nay. But I would say, historically speaking, in my office, when we pre-approve clients and they go write offers on condos, even under the traditional methods, it's not like a slam dunk. Half the time or not half the time, I'd probably say a little bit less than half the time though, 20 to 50%, you're working with the HOA. You're working with the real estate agents to tighten up a few things with the documents that they need to turn in, whether it's the budget or whatever it might be, the questionnaire to get the condo project approved, the HOA approved. Am I pretty accurate?
Yeah, it's its own separate approval. You got the credit package from the borrower. Usually you have the collateral, which is the appraisal, but the condo itself is its own approval.
And that's the value of working with a local lender. I'm going to say this a lot, and I believe this. That's why I don't work for the big box banks or the credit unions. Working with local pays off if you're a real estate agent. I know I'm preaching to the choir there, but the fact that you got a senior, Dan, how long have you been in the mortgage industry?
2001.
2001. So
yeah.
20 plus years. I'm going on my 16th year. Okay. You've got professionals that finance condos every single day, helping manage that process, working with your HOA, because it's really important to know this. Real estate agents, you probably already know this. Buyers, sellers, the people running your HOA, the people managing the HOA, most of these condo projects, they have full-time jobs. They work for a living. They manage the HOA part-time or on the side or as a charity, if you will, right? And so they're not sitting in front of their computer all day long. And so being able to have someone, and they don't know all the guidelines, nor should they. So having someone like Dan and someone like Marlon, the head of our condo department, to kind of be a resource for the HOA and the president or whoever, the treasurer, whoever is getting us the information that we need to help you with your financing is so important. And so I wanted to throw that out there to you guys as real estate agents so you understand a big part of our job with financing condos is helping educate both the borrower, the listing agent, the real estate agents, and the people running the HOA. Because if we don't have that info, we don't get the financing and everyone's uptight, then the values in that condo project go down, etc. So I think we wanted to start with that to kind of tee up this conversation. I think the first thing, Dan, I want to do is I want to talk about the three main things, the three main drivers of these changes. And before we kind of get into the three changes, why? The big question right now that I'm getting from real estate agents is why now? Like, we're in a tough market. Why Fannie Mae should be loosening their guidelines, not making it more tough? Well, what happened, Dan, you might want to correct me on the date. What was it? I don't know the exact month, but in 2021, right? There was a catastrophe with a high-rise condo in Miami. Was that correct?
A collapse. Yeah, summer 2021.
So a condominium project in Miami collapsed. And so I think these changes are long overdue. I think if I was buying a condo right now, the first home that I bought when I was 22 was a condo. I didn't know anything about my HOA docs. I just knew that I had an HOA dues every single month of $97 a month. 4 years later, it was up to $230 a month. Okay. That's the only thing I remember about me personally dealing with an HOA. I think that is so important to understand if you're buying a home that you're going into a partnership with, if you're buying a condo, you're going into a partnership with the HOA. So number one, understanding how healthy or strong that HOA is really important, because there will be a time that you'll need to sell that or maybe move on. And the ability to do that and to navigate through that is super important, okay? So these changes come from a catastrophic event that happened in 2021. Fannie Mae, Freddie Mac, they said, you know what? We are too lax on our guidelines. We're going to put a couple of overlays here to make sure that we can prevent this from, or do our part to prevent this from happening. So in September of 2023, these new guidelines went into motion. Dan, we've been practicing these new guidelines for the last year, right?
Yeah, there were recommendations from the investors. So these three big things were, you may have, as a realtor, you may have seen this in some of your condo project reviews, but as of this last September, they are required.
Yep. Okay. So here are the three main changes. All right. And Dan, I'm driving this, but feel free to jump in anytime because you're way more eloquent with regards to these guidelines and these changes and regulations. So the three main changes, number one, any structural or mechanical changes in the last 3 years must be reported and be reviewed. Now,
yeah, the lender's going to want to review that.
Lender's going to want to review that. Dan, how are we going to know? I know I've got some questions here because I've sent this out to a lot of real estate
Yeah,
agents.
our condo questionnaire is going to ask that point blank. And if there's been any indicator that yes, we're going to ask for those and we're going to want to review them to look for one of the big ones here.
So any big structural or mechanical changes in the last 3 years, that could be a yes or no question, but the HOA is going to know this because condominium projects or HOAs must have typically an inspection every year or every other year. Is that correct?
I think if the income's over a certain amount, they're required to have these along with the reserve study. Reserve studies telling them that things are due for inspection once the life of the component hits the end of the line.
So there's things in motion that are going to prompt these inspections or prompt the notification of structural or mechanical changes or needs for. So any structural mechanical changes in the last 3 years are going to need to be reviewed. They're going to need to be brought to an underwriter's attention. Number two, this is big. Okay, this ties into maybe some deferred maintenance, the quality of the project, any unfunded projects in excess of $10,000 per unit. It makes it automatically ineligible for delivery to Fannie Mae.
So do unfinished projects. If there's a big critical repair project that hasn't been completed automatically ineligible.
Okay, and so this is important one from a health and safety standpoint too. But Dan, how important is this? You and I, one of my clients, unfortunately, we had to decline the loan. This was this last year. It was a condo. We knew that there were going to be special assessments down the road. We knew
severe deferred maintenance.
Yeah, deferred maintenance. We knew the state of the condo project. We knew that her debt to income ratio was pretty darn close to being maxed out because of those repairs needed, that her homeowners association dues was going to probably go from $230 a month to probably $500 or more, which would have killed the debt to income ratio, which would have caused her to be declined for the loan, or potentially go into default down the road. Even
right, who knows what the future plays for her.
So they're smart here going, if your unfunded projects are in excess of 10K per unit, there's going to be a massive increase in your HOA dues at some point down the road too. Right. And so to eliminate big financial surprises to homeowners is a big thing. But the other thing is health and safety. Okay. And then the third thing is, and this is really cool because they're building this back, Fannie Mae is. And right now, we confirmed last night in Washington State, there's about 30 condo projects right now in the Fannie Mae directory that are unavailable, meaning no go. I mean, I'm just going to call it a spade a spade. They're on the blacklist. They're blacklisted. They're non-warrantable, correct?
Yeah, too far gone.
Too far gone. So that list will grow. So this again goes back, real estate agents. I need you to get me, well, here, let's just go here. I need you to get me the name of the association, not just the address, the name of the homeowners association.
The project name, yes.
The project name, the city, the state, the zip. If there is an address, okay? And then we can research it in those internal directories. Now, we do so many condos in regards to financing so many condos here in Washington State and on the West Coast with New American Funding. We have our own internal directory, nationwide directory. So if it's approved in our directory, that means it's approved by Fannie Mae. That means we can streamline the process a little bit more. But if you get us this information up front, we can confirm first and foremost that it's not on that unavailable list, right? So that's important right there. We can save you the pain. We'll verify that's the first thing we're going to do. The second thing that we can do is now go, okay, so is it on our approved list? It's not. Cool. Let's get it on our list. So if you can get us a copy of the condo questionnaire, the budget, and the master insurance policy, that's essentially all we need and you don't even have to have a loan application with us. Right, Dan?
Right. Even if they just want to hand over contact information and the project name and give us a direct path to get in touch with this management company or this HOA, we can get to work on that for you.
It's so important because we do so much work with local real estate agents. We're all over the Puget Sound, from Vancouver, Washington to Bellingham. All right. And there's condos up and down all over the state. By getting us this information, we can go and we can update our directory. And so that when you do have a client one day, boom, it's there. And we can now streamline that process for you. Like Dan just said, if you can't provide these documents to us, ideally get us the resale certificate. That's awesome. If you can't, just get us the contact information for the HOA and we'll do the heavy lifting for you. Okay. Now let's say you do have a buyer and you're showing homes, you're showing condos to a buyer. Help us out, get everything to us as soon as you can. So communicate with the listing agent. If you are a listing agent, get everything you can as a listing agent to us up front so we can help you better streamline the process with your listing, with your sellers, and with buyers.
Yeah. If you got a transaction coordinator, make sure that coordinator is reaching out to the lending team with that information up front. Same time you'd send over a sales contract. That's crucial that gets done.
Yep. And I think too that you set proper expectations. If you get it to us up front and you allow us to do the work, by the time there's a buyer, you're fine. If you go and you're showing condos this weekend, for example, and you just watch this video and you're like, Dan, from start to finish, it could take a little bit more time, depending on how quickly the HOA can get us the information, depending on what's on the questionnaire and what's on the master policy, insurance policy, and what's on the budget. So set proper expectations with your buyers, with your sellers, in regards to the actual approval process. But again, I'm going to go back. Fannie Mae is leaning on direct lenders like us to help them rebuild this database nationwide. Is that fair enough to say, Dan?
Yeah, absolutely.
Cool. Okay, let's talk about, I think the biggest thing you talk about the most. I've asked you numerous times, Dan. I'm like, what's like the one big thing with these new changes that we got to pay attention to? And you keep saying deferred maintenance.
Deferred maintenance.
Yeah, that's the big thing that's going to jump out. So, on July of 2023, Fannie Mae, Freddie Mac, they updated their guidelines. Here's what changed. We already talked about the structural mechanical changes in the last 3 years. I think the biggest thing too that we need to pay more attention to is not necessarily redefining the term routine repairs that are preventative or typically what you'll see covered on the budget or identified within a budget, but it's the critical repairs. So this third bullet point, these are things that, again, we'll go back to that $10,000 per unit, but I think they're going to be a little bit more strict. Dan, you might want to, if you want to shed additional light on this, but some of the things that I included are material deficiencies that, if left unfixed, can cause failure within a 1-year time period.
Yes.
Like water, physical deterioration. You mentioned earlier unfunded repairs. But anything else there, you want to shed some light on the importance of that critical repair note?
Yeah, anything health and safety, whether it be a roof that's due to be repaired, not only are we going to ask these questions on the condo questionnaire itself, that's a yes, no checkbox, but also there's going to be likely a reserve study that's in the file. If it's a reserve study from 2021, and on that reserve study, there's a table that says that there are some big ticket items that were due to be completed before today, we have to dig into that. So anything that is structural or has anything to do with health and safety, automatically are gonna be in a situation where we may end up being ineligible.
Yeah, we were talking with our head of our condo department the other day, you and I were, and Marlon said, I asked him a question like, what's like the one best piece of advice we can give to real estate agents or heads of these homeowners associations to make sure that their homeowners association, the condo project, stays in good standing? And he said, making sure that they stay true to what the reserve study suggests.
Yes.
So just following the recommendations. That's why they have those. That's why they have that reserve study. So you follow those recommendations, you'll stay on track, you'll eliminate or minimize a lot of these problems that can accumulate over time. So I have the reason why I made this slide, a lot of real estate agents that get new construction condos confused with resale condos, like rental concentration, like how many of the units are rented out. That really matters more so with new construction. Same thing with single entity ownership. So if there's 5 to 20 units, that person can own 2 of those units. Okay, if there's 21 plus, they can own 20 to 25% depending on the financing. But we don't really, Dan, as a loan processor and an underwriter, like you don't see on resale these 2 items being an issue.
No, these used to be big questions in the past, but they don't really come down the pike very often anymore.
The bigger 2 are, and we'll close with this, you guys, is litigations. Okay, any current or pending litigations, or even pre-litigations, need to be brought to the attention of the underwriter. They need to be reviewed. Now, here's the other thing that we just worked on a deal that had some pending litigations, and we were able to fund it. Not all litigations make the project ineligible. Okay, litigations, for example, with insurance claims that are not 100% complete, kind of an issue, right? But like pre-litigation just needs to be reported and reviewed. A great example, a tenant suing, or not a tenant, an owner suing another owner, right? Or someone comes and slips on the sidewalk and there weren't signs or whatever, and they're suing the HOA. Stuff like that, I think you're probably going to be okay. But again, it needs to be reported for review. I'm going to let you talk on this because I know you know a ton about it.
Yeah, if a deck were to fall on one of those people walking down the sidewalk, then obviously they'd have to do with the structural integrity of the project. But if someone slipped on some ice and there was a lawsuit, that might not be a deal killer. We could determine that the insurance may eventually cover that. But if there's any telltale sign of, um, a part of the building falling off to create that slip or that fall, then they're definitely going to dig into that, and that may be becoming ineligible.
Love it. Love it. And the last thing I'm going to let you talk about, because your wife happens to be in insurance, and has for a long time, is super smart. We always go to you for our deep insurance questions, but this
I
is
go right to her.
yeah. Well, I mean, this one's really big. I mean, this is kind of
Yeah.
almost, it's black or white. There's no gray area really with this. But I want you to talk about this because I think, so we're in overinflated times here in America. People are trying to cut and save money, cut corners and save money wherever they can. And what we've seen is HOAs. And we heard an ugly example from Marlon, the head of our condo department, the other day. But what we've seen is HOAs cutting the corners and trying to save money on homeowners or insurance master policies because they're so stinking expensive. And so let's talk about what makes a project. And one of the first things that you need to turn into us is the master policy. What are a couple of things that would make the project ineligible relative to the master insurance policy?
Not having a true replacement cost. Perhaps to save money, they went and shopped with an insurance carrier that only offered actual cash value policies, or maybe they needed to get insurance and co-insurance to make it work. Or the one that we're seeing the most is they're just raising the deductible. It's the easiest thing for an insurance company to do is to raise the deductible, over 5%. If you got a master policy and the deductible is 10%, probably got a problem right there. So the master policy is, if you're not giving it to us up front, that's one of the number one documents that we're contacting the management company or the HOA for up front, so we can get a read on that quickly.
And that's probably too one of the things that's causing some of these projects, these HOAs, to be ineligible, to be on the unavailable list. Yeah,
it's a lot bigger than that. A lot of carriers don't want to service habitat policies. A lot of carriers are getting out of the condo game altogether, and it's just so happening at the same time that Fannie and Freddie are making the guidelines a little bit more strict.
It's a big.
Don't be surprised if you hear of a lapse of insurance with your project where the management company's out shopping for new insurance.
Yeah, it's a big deal right now. And we heard from Marlon the other day, he was telling us a story about a project that was worth about 15 million. The policy on it was worth 5. So, I mean, it was a $5 million policy on a $15 million project.
The boards don't always know that that's a bad thing. They just, sometimes they put a measure in front of them to vote on, and they just don't quite understand it. But all they see is that their HOA dues are going down.
So I want to recap, because I think this is really important. Real estate agents, I don't want you to overthink this. The idea is just to bring about awareness, how important this is. But don't overthink this. If you get a listing, worst case scenario. Now, if you have a really great relationship with a loan officer and they specialize in condos and they've crushed it for you before, and they have their own in-house condo department and can do this for you and can turn it around for you rather quickly, then do this. All you need to send me, worst case scenario, is just the contact info for the HOA, and we'll get all of the information. We'll work with them to fill out the questionnaire. This condo questionnaire, it's an established project questionnaire. It's 1, 2, 3, 4. It's 5 pages. So it's not, I mean, yeah, the writing's a little
mostly yes or no stuff. Yeah.
Yeah. Well, you'll see a lot of yes and no's. We will help them. People like Dan Dietrich will help them fill out this questionnaire. The most important thing is that you get us the info so we can help you better understand what you're getting into. Number one, that's on the listing side. Buyer's side, we never want to sell our clients or put our clients in a position that is a bad financial position for them. Buying the wrong condo, buying the wrong house could be a horrible financial decision for someone. And so getting us this information up front, making sure you have the right contingencies and disclosures to your clients, sending them this video is so important, okay? I have another video where I explain how to understand and interpret the resale certificate. I make every single one of my clients, you can find that on YouTube, on my YouTube channel, but I make every single one of my clients watch that if I know they're going out shopping for condos. And I ask them to email me or text me once they've watched that video, because it helps them better understand what they're getting into. Again, I don't say this to scare you, but when you're buying a condo, you're going into partnership with the HOA. Okay. And it's so important to understand who your partner is in life, with your partner or your spouse, in business, and when buying a condo. So any closing comments, remarks, tips that you have, Dan?
No, I think agents usually do a really good job vetting their new listings. There are new guidelines in place that are going to make it tougher.
Yeah.
Let us help shoulder that work with you.
Yeah.
It's just like I've said it before, it's just like pre-approving a borrower, fully pre-underwriting a borrower before they go out shopping for a place. Better to have that done up front. Same with these condo reviews. Let's get them done up front and know what is available to you at the end of the day.
Amen. So closing remarks from me for real estate agents. I think there's opportunity. There's always an opportunity in chaos. The opportunity here is condo projects. It sounds, from the sounds of it and the looks of it, when we looked this up last night, there was about 20 or 30 on the approved list in Washington State. There was about 30 to 40 on the unavailable list in Washington State. Now, internally at New American Funding, we're building that out.
Mm-hmm.
I need your help. We need to get more of these condos approved. So number one, there's an opportunity there to go out and build relationships with HOAs. Every time you sell a condo or list a condo, take it upon yourself to go to the HOA meetings, to meet with the president, be a resource, be an advocate, loop me in. The other thing is, Dano, and this isn't about FHA or VA approved condos, but getting a condominium project approved for FHA financing is important. It's big. FHA is one of the top loan programs for first-time homebuyers. As home values continue to grow and rise, FHA is a great loan option for a first-time homebuyer, and condos are a great option for first-time homebuyers because home values are so expensive. So the opportunities here are, I mean, there's hundreds of condo projects in the greater Seattle area. Being able to reach out to HOAs and let them know that you're an advocate for them, that you have resources available to help get their condo, their HOA approved, and to help facilitate more transactions, because the more transactions, the better the chance home values are going to go up. You get in the way of those, or you don't have as many loan options to buy units in their project, values tend to stay down or go down. So that's my encouragement. I think there's opportunities. I want to be a resource. If you're watching this and you're a real estate agent, I want to connect with you. I want to be a resource. Dan, my team is always here for you guys. They're incredible. Leverage people like us to help you go out and build a greater reputation, serve your clients at a very high level, and build each and every one of the communities that we have up here in the Puget Sound and the greater Pacific Northwest. So, Dan, I appreciate your time today. This was valuable.
Always, man.
Yeah, buckle up. Things are getting crazy. A little bit more work on our end, but we love it. We're cut out for it. Right? All right, man. We'll see you guys later. Message me if you have any questions, and we'll get you another update. I'm sure there's going to be more updates with this stuff, and we'll get you additional updates as they come out. Bye for now.
See ya.